Folks, before we get into the nuts and bolts, I want to start with something important. On behalf of a grateful nation, thank you for your service to our country. Whether you served for 4 years or 40, in peacetime or in conflict, you stood up when your country called. You earned a set of benefits to help your family succeed, and one of the absolute best is the VA home loan. It's a powerful tool. You just need to know how to use it to get the best results. That's exactly why we're here today, to demystify the costs and fees so you can move forward with confidence. My goal today is simple. I'm pulling back the curtain on the fees you'll see when you use your VA loan benefit. There's a lot of confusing information out there. Sometimes it feels like a foreign language. That stops right now. We'll break it down in plain, simple English. No jargon, no runaround, just straight talk. You'll walk into closing feeling prepared and empowered, not anxious or surprised. We'll tackle the real costs, the VA funding fee, the big one, plus the other typical closing costs, and how to save thousands, or even skip certain fees, when you're eligible. When you're navigating a complex process like buying a home, you need a guide you can trust. That's why I want you to meet my friend, Kris McCullough. Kris is a retired United States Marine. Discipline, integrity, mission accomplishment. After service, he applied those values to a new mission, helping veterans become homeowners. He specializes in VA loans and translates mortgage speak into plain English. He's seen the acronyms and the confusion, and made it his crusade to replace confusion with clarity. He'll even pick up the phone on a Saturday to walk you through a question. What I admire most? Straight talk. The good, the bad, and the ugly. Today we're using Kris's no-nonsense approach to explain VA loan fees, who might be exempt, and other closing costs, plus tips to keep cash out of pocket low. By the end, you'll feel like you had a personal coaching session with one of the best. Let's jump into the big one, the VA funding fee. It's important to know what it is and why it exists. It's a one-time fee paid to the Department of Veterans Affairs, not your lender. Its purpose is to keep the VA loan program running for future veterans. It offsets program costs and reduces the burden on taxpayers. Think of it like an insurance premium. The VA guarantees part of your loan. That guarantee helps lenders offer terms like zero down payment. When does it apply? Typically on a home purchase, or when you refinance using your VA benefit. First time or using your benefit again, expect this fee to be part of your loan. Good news, you can usually roll the fee into the loan instead of paying cash at closing. That adds to your principal and slightly increases your monthly payment. For most people, a small monthly increase beats bringing thousands to closing. The VA funding fee is a percentage of your loan amount, not a flat dollar fee. Your exact percentage depends on the loan type, your service category, whether it's first use, and any down payment. Don't worry, it's straightforward. For most first-time regular military users with zero down, it's currently 2.15%. Here's a quick chart for first and subsequent use, with and without a down payment. Example, buying a $300,000 home with zero down. 2.15% of $300,000 equals $6,450. Second time using the benefit with zero down, the fee is 3.3%. On the same loan amount, that's $9,900. Subsequent use is considered slightly higher risk, hence the higher fee. A great tip, making a down payment can lower your funding fee. Put 5% down, $15,000 on $300,000, your fee drops from 2.15 to 1.5%. That's $4,275 instead of $6,450. A savings of over $2,000. 10% or more down? The fee drops to 1.25%. Remember, you can finance the fee. In our example, your loan becomes $306,450. It adds a manageable amount monthly and preserves cash for moving, furniture, or your emergency fund. Now, for fantastic news. Some veterans are completely exempt from the VA funding fee. This isn't a loophole. It's written into law to support certain veterans and families. If you're receiving VA compensation for a service-connected disability, you don't pay the fee. That also applies if you'd receive disability compensation but are receiving retirement or active duty pay instead. Surviving spouses of veterans who died in service or from service-connected causes and who receive DIC are also exempt. Your lender gets your Certificate of Eligibility, the COE, from the VA. It confirms your benefit and whether you're exempt. If exempt, the lender removes the fee. Simple. If you believe you're exempt but your COE doesn't show it, contact the VA ASAP to update before closing. That's potentially thousands saved, right off the bat. We've covered the VA funding fee, but it's not the only cost on your settlement statement. With any loan, there are standard closing costs. These aren't VA fees, they're third-party charges to complete the transaction. The VA limits which closing costs you can be charged, an extra layer of protection. Expect an appraisal, title fees, recording fees, a credit report, and sometimes a survey. Lenders may charge a flat origination fee up to 1% of the loan amount. That covers processing, underwriting, and funding. If they charge the 1% flat fee, they can't also tack on small admin fees. This rule simplifies fees and protects you from being nickeled and dimed. The VA allows the seller to pay all of your closing costs, including the origination fee and even the VA funding fee. In a buyer's market, ask for seller concessions. It can dramatically reduce cash to close. Two incredible money-saving features set the VA loan apart: zero down payment and no private mortgage insurance PMI. Conventional loans often want 3 to 20% down, 60 grand on 300,000. The VA loan smashes that barrier. Qualified veterans can put zero down. PMI can add hundreds monthly on low-down loans. With VA, no PMI ever. On $300,000, PMI might be $150, $250 a month. VA avoids that cost entirely. Over 5 years, that's roughly $12,000 saved from no PMI, plus the down payment you kept in savings. The VA loan isn't just a loan, it's a powerful wealth-building tool. Let's arm you with pro-level tips to minimize out-of-pocket costs. 1. Ask every lender for a loan estimate. It's a standardized 3-page breakdown of estimated costs. Use it to compare offers and spot red flags. Shop around. 2. Don't be afraid to negotiate lender fees. Ask your preferred lender to match or beat a competitor. 3. Lean on your agent to negotiate seller-paid costs, up to 4% allowed by VA. 4. Stay organized. Keep your COE, loan estimates, purchase agreement, and all correspondence. And hey, everyone gets sticker shock at closing. Most items pay other pros, not lender profit. Breathe. You've got this. We've covered the VA funding fee, the other closing costs, and the big advantages of your VA benefit. You should feel confident and prepared for your next step. The VA home loan is not a handout, it's an earned benefit. It was designed to make homeownership tangible and affordable for your family. It's one of the best tools for long-term wealth and stability. No down payment, no PMI. Your mission: get your finances in order, check your credit, and find a VA specialist. Ask questions, get a loan estimate, build your team with a military-savvy agent. Thank you for your service. Now let us help you build your 4 walls. I'm Kris McCullough, retired Marine, loan officer, and owner of the KDM team. We're known for funding loans other lenders fear. We help veterans fund homes and build dreams across multiple states. Find me on Facebook, YouTube, and Instagram, or visit krismccullough.com for more information.